How does theta compare to historical average theta? Have you ever wondered how the current rate of time decay for options stacks up against what has happened in the past? Understanding this can help you make better trading decisions. Theta is a key player in options trading, measuring how much an option's extrinsic value decreases as time goes by. This is often referred to as time decay. When traders look at current theta compared to historical average theta, they are trying to see if the current time decay is typical, faster, or slower than what has been observed in the past. As an option gets closer to its expiration date, theta usually increases in absolute value. This means that the extrinsic value of the option is declining more rapidly as the expiration date approaches. Historical average theta values can vary based on several factors. These include how much time is left until expiration, the price of the underlying asset, market volatility, and interest rates. When you compare the current theta to these historical averages, it gives you a clearer picture of whether time decay is speeding up or slowing down compared to what is normal. One important factor to consider is the time to expiration. Theta tends to be smaller when there is a long time until expiration. As the expiration date gets closer, theta grows larger and more negative. If you notice that the current theta is significantly different from the historical average for that time frame, it could indicate unusual market conditions or changes in volatility. Volatility also plays a big role in theta. Higher implied volatility usually means a higher option premium, which can affect theta. If the current volatility is different from what has been typical, it can lead to theta deviating from its historical average. Another aspect to think about is the option's moneyness. At the money, options often have higher theta compared to options that are deep into money or out of the money. Historical average theta values can vary based on where the option stands in relation to the underlying asset's price, so this is something to keep in mind when making comparisons. Traders often use the comparison of current theta to historical average theta to inform their strategies. For example, if the current theta is higher than the average, it means that time decay is happening more quickly. This can be beneficial for sellers of options, as they can collect premiums that erode faster. On the flip side, buyers of options face a greater risk from time decay. Lastly, the theta decay curve typically follows a predictable pattern as expiration approaches. It starts low and accelerates as the date nears. If you see any deviations from this curve, it could signal changes in market sentiment or upcoming events that might affect option pricing. In summary, comparing current theta to historical average theta is a helpful way to understand how time decay is behaving. This knowledge can assist traders in managing their risk and optimizing their strategies based on whether options are losing value faster or slower than usual.